Don Dawson, my trading warrior brother. How are you, buddy?
Doing good, doing good. You know the old saying, above ground, taking in fluids, it's going to be a good day.
All right, I've heard different extrapolations on that. Just staring down at the grass is a good day. Things like that. So, market-wise, everyone's got precious metal mania going on here.
Uh-huh.
And what are you looking for?
You know,
Things like that are a little bit more out of favor than where everyone else is going?
yeah, normally you'll find me in the favor. I'm a trend follower, so I'm sort of in the favor camp. And but I agree
Okay.
on your dollar analysis there. I'm getting bullish on the dollar myself, and I thought that was a good call. I thought today it was interesting watching or listening to some of you guys talk this morning. Your trades are all directional. So if you're wrong on direction, you lose. So I thought we
Right.
would talk about something a little different today, and that is commodity spreads. Now, we
Okay.
can't teach spreads in one 30-minute session here. So, but I
Yeah.
just want to do a little outline of some of the benefits of it and a couple of seasonal spreads. One I just wrote about in the soybean market about how it reduces the risk and how much capital is required to trade them, and to show the significant proof that spreads are more I don't like that word predictable, but as crazy as directional trading is, they're a little bit more erratic. Whereas spread trading, we can see statistically actually does have a better trend following. So anyway, I thought we would just kind of touch
Uh,
on that today.
no, I think it's a great topic.
Okay,
I
it's
know people. I knew people. That's all they did. They did
yeah,
bean oil spreads, bean spreads, cracked
right,
spreads. Spreading. In
yeah,
fact,
spreading.
one of my best friends in L.A. when I was younger in the business, his license plate said Spreader Steve. That's
There
all he
you
did.
There you go.
So,
Yeah. My
uh,
very first trade in futures was a spread. I did the old TED spread. I was long T bills, short euro dollars. And man, I'll never forget my broker going, "You sure you don't want to do a regular spread first or a regular futures trade first?" And I said, "No,
yeah.
I just read this book and it says to buy this spread." Boy, I got riot act read to me for that. Books
And
don't
that
make money.
and that ties in with your seasonal work as well, Don, because a lot of these spreads are seasonal, aren't they?
Very much so. Yeah. I mean, that's sort of been my forte throughout my trading career, and it's been a long one, relatively speaking. And just following the longer term, like seasonal patterns and the spread trading and stuff like that. And the directional trades are okay, but I found my best success comes when the spread trading, long haul. So,
Okay,
but
so
so I
let's see
just,
your screen, bro.
yeah, okay. I'll put that up here. Where are we at here? Dun, dun. There we go. There you go. Should be able to see it now. Yeah.
Okay, so I hear that a lot of soybean farmers are letting the beans rot in the field. Is that true?
Yeah. I'm hearing the same thing. Of course, when there are rumors, stuff like that going around, you really don't know. But a lot of producers will do that kind of thing. The coffee market is notorious for that. Like when prices get down under that $1 a pound, which is their usual production price, the farmers will actually burn the trees, or the producers down there in Florida and Brazil and so on. But they will burn those trees, and it doesn't come back like next year. It takes a couple years for trees to come back. And that, sometimes I look at where prices are right now, and then I can see, pretty high prices in coffee, but I can see it's going down here from coffee. I think coffee's done at last, and we're probably going to see somewhere in the low dollar 25 again.
Yeah,
Just
that whole sector, that ag
yes.
sector, the farmers are under greater stress, I think, than they were in the mid '80s,
Yeah,
when corn was $2 and
exactly.
beans were 8. And it's because of the input costs.
Yeah.
And
Yep.
I mean, there's stats that 70% of them are going to be bankrupt by the end of the season.
It's going
Who grows our food next year?
well, that's just it. Yeah, we're going to be wishing other countries to send us some food, I think.
Yeah.
So,
All
but
right. I'm
so
through interrupting. Go
I
ahead,
we're not
Don.
interrupt. I could talk about that stuff all day.
All
But
right.
I just opened up. I put it on the MRCI page here,
Got
just to
it.
give you an example of a thing here. They put out their October, September trades. But I just want to show you something here. For example, like here's the October trades coming up. And what I want you to just kind of take a look at here is right here. It's called the win percent in this column right in here. And they usually put about 15 trades per month out. And what just looking at this, you'll notice we got this one's kind of a freak right here, but down here we got the mini Dow Jones has a 100% track record over the past 15 years of basically going up between October 27th through December the 7th, which is pretty
Wow.
normal for the stock indexes. They're very powerful in the last quarter of the year. So if you
Yeah.
can ride out October and then get a good place to get on board, that's not a bad trade. But that's sort of an anomaly right there of just a 100% or 15. Most of the time you get 87s, 80s, someone like that. Now, when we go back and we take a look at the spreads as opposed to the seasonals, you'll see a lot more like 90s, 100s, another 100, some 93s, 93, 93. What this tells me is these particular spreads over here on the left, some of them are long, like the 5 year, short to 30 year. Then you got intra commodity, which are the ones I really like to trade, and that be like August lean hogs. You might buy them, selling the February hogs, right? Here's a British pound and a Japanese yen, and that's got like between October the 7th and November the 11th, the pound basically outperforms the yen. So any of your traders who are trading outrights might be one of those things of queuing between maybe they could trade the British pound, Japanese yen. I'm sure it's a pretty volatile currency to trade, but that
Yeah.
seasonal pattern right there just kind of lets you know, even in the spot market, the pound should be stronger than what the yen will be. Anyway, so the point is these spreads just have more consistency in them. And this one's actually pretty low numbers right here for a spread. But this is one of the things that kind of lured me into trading the spreads is because of how much more seasonality is trending. In meaning year after year, they seem to do the same things. So what I'd done is here we go. I'd written this recent article. It was in bar chart, and it was on soybean traders, and it was about a seasonal pattern coming up with a 93% win rate. And when you're looking at this is a monthly chart of the soybean market, and this is the September 25 soybeans. Actually, it's a continuous chart nearby. And so here's where the all-time highs we were up in here. And then down in here, we get these, pretty much I call these production costs. When you get to these monthly charts and you see going back over the last 10 years, and you got multiple lows coming in somewhere in the same area, typically in commodities, that's some kind of a production cost area. And they usually, I
Okay.
call them boom to bust type of cycles. Commodities go to these all-time highs, and then they come back to the production cost. And simply because once you get to all-time highs, everybody and their brother starts producing that commodity. And then it just comes and shakes out all the weak hands, gets back down here to production costs and makes that next big run up to all-time highs or it goes higher, whatever. Now you see we've been there and we're on our way back. A lot of our commodities are doing this now. Corn did it. It went to $8, came back down to 3.
Yeah.
We're going to see, I think coffee is going to do the same thing here. I wouldn't be surprised if cattle isn't close to doing something like this too. Cattle showing some signs of weakness. I'm not ready to short it yet, but it's looking kind of flaky up here for that uptrend. I mean, they've had quite a run, so I don't think
Huge run.
yeah, I
Yeah.
don't think they can
So
complain about the
so
profits.
maybe if meats are coming off, it is time for the grains.
Yeah, well, true, because feed is one
Corn
of the feed sources. One of the things.
Corn's has a nice run off the lows. Do you think the bottom's in?
Yeah, it's that time of the year too, Dale. That's a good point. Seasonally, we do start putting a bottom in here. It might be a little bit early right now because of the excessive amount of corn that we do have. I, you and I talked about this last year. I'll never forget this one. We talked about it, and you were saying you were bullish on corn already, and I said I'd just like to see it come down one more time here and then go up. Well, it never did come back down, and then your leg kept on going up. So congrats on that trade. But that's what I think we're going to see this year because we have such an oversupply of corn that
Yeah.
we've still got time before. Usually, when we got this much corn in the market, it's later towards December we get the seasonal low comes in. So we'll see if that pattern holds for this year or not. Again, the daily trend has turned up for me. I'm just not quite the spreads, if you will, the calendar spreads on corn haven't shown the same bullish pattern that the outright chart's doing. So when they start
Okay.
to come
There's
around a little
no
bit.
backwardation in there yet. It's
Yeah,
still
it's a little early for
pairing
backwardation,
chart.
obviously. Yeah, but when
Yeah.
you start seeing just a little bit more where the front month or the near month is just being bought up more than the back month, that's usually a pretty bullish sign for me. So if I see a trend on some of those calendar spreads turning up, that's a pretty good sign that outright's going to be turning up soon as well. So I'm kind of
Okay.
keeping an eye on them for right now. Right now, they're not looking really bullish. So one of the
Mhm.
things I just want to watch. So anyway, so the key on this is when we get near market highs, obviously the volatility you can see by these monthly candles really starts to pick up. And when you get in here, like right now, the November soybeans, if you were trading an outright contract, it moves about 15 cents per day and it's $50 a penny. So that's around $750 per day in average volatility. So if you were trading the outrights and you could either be I want to be long or I want to be short, right? And then you could come down here and you could trade something in the well, options is one way of reducing the risk as well. But we all know if you've traded options, you understand there's a lot of learning called Greeks and everything in the options market, and people make very good money trading the options. I That's one of the reasons I went into the spread trading was because it was a lot less complex or complicated than options, in my opinion. It's the same concept pretty much too. Down here, though, if we were trading the calendar spread, like the one I want to talk about, the November calendar spread of being the number 2025 November, and then next year's 2026 contract. It's a popular time of the year for the spread. That
Okay.
one moves about 5 cents per day, which is only $250. So you see, we reduced that risk by $500 a day right here.
Right. Yeah.
So I'm just going
And the upside potential too. You're
to,
not
right.
gonna, well, I don't know. There are some times I've seen times where the spread could move more than the market.
Yeah, you're probably right. Especially if you start getting a lot of limit moves in them, then you get those,
Yeah,
I think synthetic positions are put on because the
right.
spread continues to trade after the market closes for a while. And
Yeah.
so that gives that synthetic spreads to come in. But they do happen, I agree, but they're kind of far and few between, which thank God for that. So
This is a great way to slow the game down for people.
right, and that was exactly what I was going to bring up right here. This 250 right here, what this also means to a trader, you have a lot more staying power. When you're
Yeah.
trading outrights, you can get so easily wicked out in them by just any little news event that comes along. But because these months of contracts are so closely watched, they're arbitraged by computers, used to be done by hand. Now computers are watching this, and there's a specific reason why each one of these months are priced the way they are. And the spread difference when you subtract the 2 months rarely changes a lot in one day. Even on some of these big WASDE crop report days, they might move 4 ticks, a penny, something like that. It's not that much of a move in these spreads, and it gives you a lot more staying power. So you can get in these for an average of, say, 10 to 20, 30 days type of a hold, as opposed to when you're in an outright, you might be in it anywhere from like 3 to 5 days before you either get wicked out or a target gets hit or a trail stop gets hit just because of volatility. So
Also, the commissions, so you're not charged for two separate legs at most brokers. They have a spread commission, right?
right. Basically, you're getting,
Which
well,
is
put it this
less
way,
less
it's
than
not,
two outrights.
you're 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 right on the other side of it, Dale, and that is the margin side. So you're not paying
Oh,
margin for both legs because they have a spread margin, which is reduced considerably. But does margin, or I'm sorry, the commissions, you do have two commissions for each leg or one for each leg because
oh,
technically
okay.
you're long one and you're going to be short another in a different market, right? So
In
you
the old
broker.
days in futures spreads, they used to have a spread commission.
Oh boy, I wish they'd come back.
Yeah, I mean
But
that.
commissions today are nothing like what we used to pay, right?
Oh no, no.
I
What
remember
is it,
paying
like
40
five
and 50
bucks?
dollars a leg, right? So
Yeah.
so they're a
Well, that's
lot more.
because you got all that full service with any trade sounded good to your broker. You
Oh
ever
yeah, they
see
call
ever
you.
see remember that commercial, the unknown broker? It was a takeoff on the unknown comic where
Oh
the
no.
guy was sitting in front of a bank of phones with a paper bag on his head. That's what the unknown comic did. And the phone would ring, and every time it rang, he would say, "Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it." Huh? You don't
I don't
remember that
remember
one?
seeing that. No, that sounds like
Yeah.
a bit of good one
That was
though.
like an Ira Epstein ad or something.
Oh
Anyway,
man. Oh,
yeah,
Ira
I'm
Epstein.
taking you back on the time machine. Go ahead.
Yeah, I remember him. That's funny.
He's still
Uh,
around. He's out there. He's
yeah.
still doing it.
Yeah. I don't know how him and I was trying to think of the other guy that was out there too, but
Larry Williams.
oh yeah,
He's
Larry
pretty
Williams,
old.
Jake Bernstein used to have kind of
Yeah, Jake's
what do
still
you call
out
it,
there.
a road
Jake's still
show.
out there.
Yeah.
Yeah, these are my generation guys.
Oh,
The
yeah.
grandfather, the the old
I can
fogey traders.
I can remember him well. Remember, and to see him, you had to go to a hotel, and that's where the seminars were, like a Saturday, Sunday
Oh
seminar.
yeah,
Right?
yeah.
So once the circus left, or and the clowns went with it, there was no more getting advice from them.
So you putting on this Novi spread?
I'm sorry for
Are you putting on this bean spread?
Yeah, this
Looks
one,
like
and then
again.
also there's another one coming up, but it's going to be the reverse in about 2 weeks, I believe it is. But I'll show you that one really quick here in just a second. But anyway, as a primer of this goes, you're kind of looking at this where you're simultaneously you're buying that November 26 soybean and simultaneously selling November 25 soybeans. And then you're subtracting those two prices. And like currently, I'm just looking at them this morning. It's $10.11 on November 25's price, and then it's $10.61. So when you subtract those two prices, I'll show you a chart here really quick. You're getting around it's a minus 51-ish or something like that. But this spread has actually been moving down and down and down. So when you're buying this type of a spread, you're making money if it's going down, because technically you're
Right.
selling the spread because you're buying a further out month. Again, that's getting into the more complicated side of it. But as long as the trend stays down, you're making money on this. But you can see just going back over months, these trends just go down. They get their little corrections. You can sell back in here at higher prices later. They trend so well on these spreads. Now, this is a line on close chart, so it doesn't have the high and the low and everything. And
Yeah.
a lot of traders use these. Trend line analysis is a lot easier on this. I still use bar charts on them in the sense of like open, high, low, close for
Okay.
those. And you can get the same kind of results out of them. You can use your own technical analysis, support and resistance, or it could be indicators, whatever your choice is. But the charts look just like a outright chart does, except they trend a little bit better.
Okay.
So when we get back up into where are we at here? Dum, bum, bum. And some of the rationale behind this particular trade is it's called a calendar spread right here. So you're buying the longer term 26, selling the 25, and you're just trading what the spread itself does. So the price of soybeans could go up or down. It really doesn't matter, but it's the relationship between those two contract months is how you're going to make money. And it's that
Right.
relationship between the two contract months that doesn't change drastically. Like the outrights, when they go up, 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 if you're not long, you're losing money, right? But the outrights can go up, and the one that you're short is going to lose money, but the one you're long, you're going to make money on. So it keeps that relationship much more steady. Think of spreading as a hedge. You know what I'm saying? Because you're long and short at the same time, but you're
Yeah.
trying to find the contract month that's going to outperform the other month based on some fundamental reason. And if
Okay.
we want to get
Uh,
into that, we can see some of those reasons down here in anticipation of supply shortage beyond the near term. So, like the 2025 harvest represented in November contract may appear plentiful, which it did this year, right? And lead to depressed nearby prices. However, a trader could be concerned about a potential supply issue in the 2026 growing season. Factors like weather concerns in major growing areas such as South America could drive up expectations for 2026 contract relative to 2025. So you can see that if there's going to be a supply issue for next year, that's why the 2026 is going to outperform the 2025 of this year, because it's pretty much known the harvest this year is going
yeah.
to have a lot of soybeans in it. So traders now are anticipating what's Brazil's crop or what's the weather going to be for next year, and that's what's impacting this trade right now. And
Right.
strong
The
futures.
only thing that would change it would be a China buy. And
Yeah, well,
the
China's already buying most of their beans from down there anyway, so
right. But I mean,
that's
if they came to the U.S. and
right,
bought beans,
exactly. But that would have to
um,
happen over the next until January, February when they really kind of keep an eye on that. But
yeah,
Brazil's going to be taking back over. I don't see that really happening anytime soon.
yeah,
So
they're not coming back.
not anytime soon, anyway. And then there's always there's a thing called contango, and that's where I think you mentioned that term a little bit earlier. But contango is a normal market, and that is where the nearby month is priced lower than the back months. Like in this
Hmm.
case, 25 would be lower than the back month, and that allows the commercials to do their function in the market, and that is hedging. And backwardation, as you had mentioned, that's something that an outright trader should be paying attention to as well. That when you see the nearby months priced higher than the distant months, that shows there's not enough supply to meet the demand in that current market. And that's usually an ultimate sign of a bull market coming up. So if you do trade outrights, that's something you might want to put on your checklist of, is the market in contango or is it in backwardation? And if it's in backwardation, that long position's got a lot further to go than what you think it does.
Yeah.
Let's
Okay. Really?
see. So anyway, I know we're getting a little bit on the long wind and we can't teach everything
No, not
about this.
really. I could use a sports analogy, for how this slows the game down for people.
Hmm.
When a college say a high school football player goes into play at the college level, at first the game is so fast until they have experience, and then it slows down for them and they start playing better. Same thing when they advance to the NFL. The game's just too fast for them. The quarterbacks that do well, it's almost like even though things are moving at the speed of light, it's slow motion for them because
Hmm.
they know, and that's what spread trading can do because know yourself. Maybe you can't handle major volatilities.
Right.
Where you put a trade on Sunday night, and when you wake up in the morning, you're gone. I mean,
Right.
I've done it. So
Oh,
did
oh,
it
yeah.
last night. Did it last night. So anyway, I think that people that, especially with limited capital, that would be
Yes.
another reason,
Hmm.
because the margins are lower, the volatility is lower. Just something great to consider. Do you have more articles about this, or how would you suggest people go about learning more on spread trading? Go to more research, or do you have a
Um,
course on it?
you
Anything
know,
like
I,
that?
I think I'm
I
trying to
think
remember.
you should start a course on spread trading.
I tell you, and here's why I haven't done that. And remember, you're talking about all your friends doing this, but right up here it says this is why floor traders considered spread trading the best kept secret. For
Yeah.
years, I wouldn't even talk about spread trading because I was afraid like the Chicago Mafia was going to come after me or something,
Oh,
So
yeah. Yeah.
they really
Yeah.
did. This was a very big secret to these guys, and when they were trading. And I mean, like for example, how many times do you remember, like in the pits, you remember the steps were set so that each one of the steps was a different month, right? So somebody
Right.
could be trading one month and maybe they're getting a little bit behind in it, so they'll tap the trader in front of them and take the other side of that, like the next contract month out. They'll go bullish on that if they're short on this near month and kind of ride out that extreme volatility. And then when the market starts to go back in their direction, then they'll tap that other trader back and say, I want that pattern or buy that pattern
Yeah.
back, whatever it is. And it
Yeah.
basically just hedged their position while they were doing it. So this went
Yeah.
on all the time in trading the market. Now that's a skill because you can still lose some money when you lock your spreads in. But when they knew what they were doing, that's how they saved themselves so many times on longer term trades.
Yeah.
So
Yeah.
anyway, back down in here. Oh, I was trying to remember. There was a fellow. I think he's down in Texas now. But if you do some Googling up for commodity spread trading, I think you'll find his name will come up. Let me just looking here really quick. Give me one second. I'm just going to check a book right here.
Live research.
I got it. Yeah, I'm sorry. I got a
It's all right. It's all
library over
right.
there. Check out it's Joe Ross. I'm not endorsing him by no
Yeah.
means, but he wrote a book on spread trading, and I got to say I've read quite a few books. I've read books on spread trading. I've ordered them in the past, or I thought, hey, this might be a good book. And I literally, by the time I got to the house, I'd already read like the front first pages of it, and I went right back to the mailbox and sent it back. But this one by Joe Ross about seasonal spread trading. He does a very good job of breaking down spread trading in the layman's terms. And I think
Okay.
it's a good primer for people who might be interested in spread trading. And you can get it on Amazon. You can buy them used and maybe you may find them in PDF files out there somewhere too. But that would be a good starting point as a primer book, I believe.
Well, Don, thanks for breaking the ice on spreads.
Yeah, just
We have some other maybe one other guy that talks about them, but not in more like intermarket kind of spreading instead of intra-market spreading.
right. Yeah, with the
You know,
intra market, you'll find the volatility is really reduced on those. The
yeah,
one problem with
yeah,
an intermarket spread you have to be careful of is both of those legs can go against you on any given day. Whereas
yeah,
when you're intra-commodity spreading, it's rare, I mean rare, that both of them legs ever go against you. Usually you're always making money on one and losing on the other. And that's the purpose of the intra-market to get a true hedge. But the intermarket, like you were talking about, even that pound yen spread, what if
yeah.
they
The
both went
guppy.
up that
Yeah,
day, or I'm sorry, one went
yeah,
up, one went down. That's not unusual in those kind of currency markets, for example. So
yeah.
I just
Gold
going to share.
gold silver ratio,
Right.
doesn't predict price.
I just wanted to
Just
show this spread here coming up. There we go. That was, I should put the other date on there and get that for you in a minute. Um, that other spread, soybeans. Here we go. Here's the one that's coming up here. So on October the 10th through October 18th, it's only a 9-day spread. And here's that same spread, but this time you're buying the November 25 and selling the 26. But again, for the past 15 years, it's got a 100% track record, averages about $440 per contract. Now, that doesn't sound like a lot, but when you're only putting up about $600 or $700 in margin for both of those contract legs, it's a pretty good return on your investment in the trade. And this could be, it might just, the trend might, or the move might start on the 8th or 9th. It might even end on the 20th. These are just a seasonal window that gives you a time frame in this area. Their research has found that that's when this trend or the spread typically moves for that time. So it's the same spread, they're just reversing it. So I just find this type of research is pretty important. And let me just pull back up here really quick. The one that we were just talking about on this article here, there we go. This is from September 25th through October the 4th, and it's got a 93% win rate, and the average profit on this one's going to be 738. So see, we're coming up to about time to be getting out of this trade
yeah.
here soon. And so it's been doing very well. I mean, it's been moving down since we got in, and it's just been going down and down. And it's like, it's not moving fast. It's not like you got to watch this thing all day. You'd be bored to death if you watched it all day. That's why a lot of traders use that line on close chart, because really all they care about is the day's close. They don't care about the intraday moves because they're so minimal in most cases. So I just thought it'd just be
Interesting.
sort of an introduction here. It was one of the first times I've written about spreads on bar chart because I wasn't quite sure how it was going to be received, but it had a pretty good following or feedback from people who are interested in spread trading. So for your listeners might be curious about, hey, it might be another way of learning to trade in the futures markets, especially to reduce some of that risk. And if they're going to be day trading currencies and stuff like that, they can have their money working for them somewhere else in a longer time environment.
Don Dawson spreading his expertise here in Face today. So,
All right, I just thought I'd throw you guys a new curveball here.
no, I mean, really, really appreciate the presentation. I think that people should consider that, especially since I think grains are going to be getting more active and they could
Most
be pretty
definitely. Yeah, it's
wild.
that
So,
that time of the year.
yeah. So, Don, thank you so much for bringing an eye opener to Face on a Monday morning.
Well,
Really
thank you for having
appreciate it.
me. Thank you
All
for
right.
having me. Enjoy it.
And I would never hedge to have you as a guest. I'm that long when you come in, Don Dawson.
Thank you, sir. I appreciate that.
All right, Don Dawson, everyone. Best place for people to follow you, Don, to go
That
to
but
Barcher. You want to show
I
it?
got actually I got on Twitter. I've got that at Majestic Futures, and that's
Okay.
where I post all my articles at whenever I come out with those. So that's
Oh, so you're using it more now.
yeah, I use it for I try and stay off of it from the chatting and conflict. It just drives me crazy.
Yeah.
But for posting articles, that's where it's almost like a library of my articles, and they're always posted on there every time I write one.
At Majestic Futures. I remember
Hmm.
the name.
And then
What
there
you
was also
probably you probably had an IB there or something.
I was actually that was my when I was managing money a little bit. It was my Majestic Futures was my company name, so just
Okay.
managed. I hung on to it after I got out of it. I still like the name, so
All right, yeah. Well, I appreciate you. There's another place to find Don. And Don, I'll get a hold of you either through there or email, and we'll be talking in December to see how some of these spreads played out.
awesome. I'll be looking forward to it, and I'll talk to you then. Everybody,
Oh,
safe, trade safe.
all right. Thank you, Don.
Okay,
So,
bye.
Don Dawson, everybody, Majestic Futures on X at, and you could find him on Bar Chart every day. And I also see him on LinkedIn. He publishes there too. So you can learn a lot from Don. I do every time he comes here. So remember, everyone, don't just count your pips, count your blessings. You could join the team in 13 minutes on the morning edge. Let's just take a look at what's happening here in the metals before I go away. Okay. So gold's giving some of it up. Silver's 40 cents off the highs. Um, maybe we're seeing something here. Just look at this 1 hour and new highs in the gold. Here's the 4 hour. Didn't even get there. On the verge of a reversal candle. Probably going to take more. There's nothing on a daily. Silver looks like it could end up being weaker for a while, especially if the gold silver ratio is putting in a reversal today. So everyone have a great day. We'll see you for turnaround Tuesday. Adios. You're very welcome, Golda. See you, Sinatra. See you, Glenn. All right, Marcus. Anyone else want to talk to me? Parth, you're welcome, buddy. Jazir, Simon. All right. We all love you guys. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.